Hello, everyone, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today we've got Steve. How you going, Steve? Still hungover from the Christmas
Hi,
party?
hi, Ollie. No, I'm good. I'm relieved that we're back in decent weather. So yeah, we didn't bring the four seasons from Melbourne across back to Sydney.
All right, just a few wet shoes in the suitcase. That's about it. All right, so moving into the agenda for the video ahead. For any of our returning viewers, this will all look pretty familiar, but for any of our new faces here, this is how we normally run it. So, starting out, we'll take a look at the major events from last week and see how these move prices and fit into our key themes. We'll then take a look at the week ahead, where we'll have a look at some of the major events for the week coming up, see how this fits in with our key themes, and give our take on where we think prices will go. We'll then move into the technical corner, where we'll put a spotlight on a couple of key different markets and analyze them using our technical indicators. And lastly, we'll move into the Q&A section, where Steve and I will answer some of your guys' most commonly asked questions from last week. So, starting off into the last week section, on your guys' screen, you will see your top traded products from last week. I think the most surprising thing for me in here is the fact that the Aussie Swiss is still breaking into the top 10. But how about you, Steve? Any surprises?
Yeah, again, surprised that the Aussie Swiss is there, but yeah, I honestly don't look at it too much, but obviously a lot of people do.
Yeah, fair game, right? So let's go in and see what moved the prices. Starting out, we had public holiday in Japan. I think we've spoken about Japan public holidays way too often, eh?
Yeah, we obviously had the public holiday in Japan, so the last one for the year, as well as also the US. So Thanksgiving, which is a pretty big tradition there in the US. So obviously lower liquidity. We've spoken about that at length when it comes to public holidays. But yeah, last week we saw the Aussie CPI, so Consumer Price Index, come in higher than expected. So the trim mean, which is the RBA's preferred indicator, was 3.3, which is above the 2 to 3% band, which they're really looking at when it comes to the interest rate decision. So, main contributor was electricity, up by 37.1%, influenced by the winding down of the government rebates. We've mentioned it previously. Plus, also, there was the rising housing costs, so up by 5.9%. Medical and hospital services rose by 5.1. Food and non-alcohol beverages, as well as recreational, as well as cultural, both rose by 3.2%. So this has really led to strengthen the Aussie and the likeliness that the easing cycle may have actually stopped. And possibly next we could actually see interest rate hike. So fingers crossed it's going to be on hold for a bit of time into 2026. But yeah, we'll just have to wait and see when it comes to that. As for the RBNZ, they actually had a 25 basis point cut. So this is the lowest since mid 2022, and an indication again that the end of the easing cycle as the economy showed early signs of picking up. So the New Zealand dollar also jumped as traders sharply trimmed expectations for any sort of further rate cuts. So good to see, I guess, two sort of risk on currencies have a bit of jump. Obviously, the Aussie as well as the Kiwi or New Zealand dollar. We also saw a bit of weaker data out of China, and then we also saw the U.S. economy. So a lot of the U.S. economy, we saw the core PPI, so producer price index, as well as retail sales for September, which obviously it's been a couple of months since then, but it did show a bit of a case for an interest rate cut. While the latest of US data, especially around the stronger initial jobless claims and continuing jobless claims, showed a bit of resilience when it comes to the economy. But towards the end, we actually saw the beige, so the US beige book, which is actually released 2 weeks before the US Fed meeting decision. So that heightened basically a softening job market, which saw basically some employers cut back on hiring plans or reduce employee hours and other sort of reduction in jobs. So now we're actually seeing about an 87.4% probability of a rate cut by the US Fed on the 10th of December, according to the Fed CME tool. However, there is likely to be clear dissent amongst the members, and the deciding vote could actually come down to Fed Jerome Powell. who could be a leading vote into whether there's going to be a 25 basis point cut or even more. But we are probably seeing that it is fairly priced in within the market. This has actually led to the weakening of the US dollar, as well as gains within indices such as the Nasdaq, for example, which is obviously tech heavy. We also saw gains in the gold and silver, which typically gains with that sort of momentum when it comes to the easing, when it comes to interest rate cuts within the US dollar. We also saw the cryptocurrencies rise. So we saw Bitcoin rise quite substantially, as well as potentially a Santa Claus rally, but we'll have to wait and see how that pans out. We also had the the UK budget. Ollie, what do you think of the budget?
I mean, there was a very well documented fumble regarding the lead up or the release of the budget, but I won't bother going into that one. But essentially, what's happened is that in the budget release, Rachel Reeves confirmed that they are looking to increase their fiscal headroom from 9.9 billion to 22 billion, with the increase in revenue expected to come in the form of tax hikes. So what this did do is fuel bets for a near-term Bank of England rate cut as they look to stimulate the economy while the tax hikes look to take money out of the consumer pocket. So the price reaction to this has actually been quite positive on the FTSE so far, with the FTSE prices gaining 0.84% from Wednesday till market close at the end of the week. It's worth also noting that each session did see an initial drop in the prices, with prices quickly recovering to all close in the green, while the pound actually closed with mixed results. So the pound initially dropped versus the dollar and the euro before finding support to push higher for the back end of the week, while weakening against the Aussie and the yen to close out the trading week. So, personal opinion here, I think that all eyes will be on the Bank of England, and I'm actually expecting a period of pound weakness alongside FTSE weakness ahead of the Bank of England meeting, while we do look to see what the budget actually influences on the forecast. And then moving into the key and notable events as well. So we've got the Russia Ukraine conflict updates. So essentially, where we're sitting now is it looks like that the US and Ukraine and Russia are still working to get a peace deal over the line. It looks like a lot of the areas of this peace agreement have been agreed on, with a few outstanding areas. But from all signs, from all comments at the moment, it's looking quite positive. And I think this is actually reflected on oil prices. So oil prices last week did trade into a 5-week low around the 57.35. And I think that's off the back of expectations that maybe the sanctions on Russian oil could start to wind down as the peace agreement is looking increasingly likely. Worth noting, though, that oil prices did start the week slightly higher, but I think that's more the result of the OPEC Plus meetings, where they decided to pause their output hikes. Okay, so I think that brings to the end of last week. So moving into the week ahead, starting off, got some data coming from Australia.
Yeah, so the Australian GDP, the quarter on quarter will be interesting to see. I would think that would be really aligned with the expected, but we'll see how that pans out. I don't see it as impacting probably the Aussie as much if it's as expected. But really looking at the sort of Chinese data, so we've so far seen the Caxton or rating dog manufacturing PMIs show a contraction or weakness in China. So we're waiting for the services data for this week. But yeah, it's being the second biggest economy, as well as impacting the sort of commodity based currencies such as the Aussie, for example. That's really interesting to see how that progresses. We've got a lot of these sort of key US employment data, as well as the manufacturing and services PMIs this week. So leading up to next week, this is probably a crucial week because it's really the last of data points that we'll probably see out of the US. That's going to really impact the decision for the interest rate cut hold or otherwise interest rate cut. So, depending on this sort of data, I don't know whether it's really going to move too much, but we could see fluctuations with that sort of 87.4% and kind of change throughout the week, depending on the data points. But the ADP non-farm employment change as well as the initial jobless claims. That's going to be vital to see whether there is still that resilience in the unemployment, or yeah, whether there is cause to concern when it comes to the Fed. So there's still other points before the Fed meeting, but considering that's a 2-day meeting, I don't think that's going to sway as much as this week's data.
All right, thank you. So I think that's a good time to move into the technical corner. So let me share my screen with everybody. So that should be coming up around now. And starting off, I wanted to take a look at the euro against the British pound, starting off on the weekly chart. So over the course of the year, we have been in a pretty strong bullish trend on the euro pound. This is reflected by prices having been overextended past all of their moving averages for quite some time now, really dating back since June, crossing over that 20-day moving average. Has managed to hold above, hasn't actually come back to test it on. So that is telling me that we are in a very strong bullish trend at the moment with a fair bit of momentum. However, last week we did close out our second consecutive down week to trade back towards its prior resistance, now acting as a support. So I want to get an idea of where we are headed for the trading week ahead. So moving now the euro pound into the daily chart, get an understanding of where we're sitting. So this is also telling me that we are in a bullish trend. I'm seeing a sequence of higher lows as well as a sequence of higher highs. In this most recent occasion, though, we can see prices pulled back towards its 50-day moving average. And the last few times when we have seen it pull back to its moving average, we have seen it interact with this price and then then extend past its 20-day moving average. So I'm looking to see if prices would do the same here. I think the fact that the prices have pulled back towards its prior support around the 87.4 cents briefly today, and then is traded up above its daily open. I do think that we are still in the bull trend. So I'll be looking for an entry to target towards its most recent swing highs if I see a break and a hold above this 20-day moving average. Similarly, if we see prices find resistance at this 20-day moving average and then move lower to break its Friday lows around this price point, I think the prices will pull back further towards this next significant price level, which will be around the 87 cents or to the 87.2 cents sort of range here, where I do think we will be able to find support. Well, again, I'll be looking for an entry to challenge towards its most recent swing highs. If I'm looking to buy it now, I'll be looking for for my risk management around the Friday lows here. Similarly, if I'm looking to sell, I'll probably be looking towards the highs of today so far. Then moving into the next market, we've got gold. Gold being probably the most talked about, the most commonly traded market for the trading for the year so far. So, for where we're seeing now, it's been very well documented. We've been in a very strong bullish trend dating back since the 20th of August. See prices tap out around all-time highs at the about 44 sort of range-ish, and then pull back to the 38.2 retracement on our Fibonacci. Can see it seems to have found a pretty solid support around this retracement level, broke above its 20-day moving average and came back down to consolidate again around its 20-day moving average before trading up now and today to actually retest and trade above its swing highs for its highs from November. Can see all of our moving averages are fanned out, evenly spaced, all pointed in the same direction, which is all facing up, which is telling me that there is still a lot of bullish momentum on the markets here. So for where I'm sitting at the moment, I'll be looking for an entry to buy with a target to retest its all-time highs. I think the risk management for that will probably be towards the Friday lows as well. Similarly, I think if we do see the prices hold around where they are now, fail to break its most recent swing high, we could see it consolidate for a little bit. But overall, I am quite bullish in this market. So I'm looking for opportunities to buy. Seeing as well, towards middle of last week, we did see a crossover on our MACD as well, which is typically a good indicator of a change in momentum, which in this case is going quite bullish. Okay, so that brings us to the end of the technical section now. So now we'll move into our Q&A section where Steve and I will answer some of your guys' most commonly asked questions from last week. So Steve, would you like to take it away with question one?
Yeah, so question one is what is the yen or JPY carry trade? So typically, Japan has historically had very low or negative interest rates. And basically, there's people who will borrow in Japanese yen, they'll convert into another currency, such as, for example, the US dollar, and then invest in high yielding assets abroad. So whether it's US treasuries or other sort of emerging market debts, as well as stocks, US stocks as well as crypto, for example. They basically then look to profit from the interest rate differential plus any sort of currency gains. So with the Bank of Japan, with the interest rates potentially going up as early as December or even January, it could actually trigger unwinding of these sort of assets. And we're looking at potentially $20 trillion worth. So in US assets, for example. And this is similar to, for example, the 1998 Asian financial crisis, as well as 2008 global financial crisis. So v- fairly worried to be, yeah, with the risk management, because this basically influences global liquidity as well as the risk asset performance, emerging markets currencies as well as bond yields. So interesting to see with how this pans out. It was mentioned towards the end of last year, but it is something that's coming up this year.
Okay, thank you. And I'll take it away for question two, which is when are the spreads most volatile? So typically we do tend to see the spreads are most volatile during times of low liquidity. So this could be around market open, market close, or around public holidays, such as the one last week with the US being on Thanksgiving. Otherwise, we also tend to see the spreads are particularly volatile around the time of major news events. So, say there be economic data releases or geopolitical updates. For example, best example I got from that is the tariffs all year round. Otherwise, as well as Russia and Ukraine conflict. As well, we do tend to see some volatility in the spreads when there is overlapping of major trading sessions, particularly this being New York and London, because this is when we see the highest volume as well as overlapping news events. So, if you are somebody who needs tighter spreads or looks for tighter spreads as part of your own personal trading strategy, one way to mitigate this risk is using our raw account type, which has spreads starting from zero point 0.0 pips and commissions starting from $2.50 per lot, which can reduce down to $1 per lot if you are eligible under our raw premium offering. Okay, so that brings us to the end of the video today. A recording of this one will be uploaded on YouTube once it has concluded. As well, we will be posting a link to this video in our VIP chat room as well as on Telegram. For anybody who's looking to get involved with the Monday Open and send us through any questions, please feel free to send them on our VIP chat room or feel free to send them to Steve and I directly. I think that's all from me today. So thank you everybody for watching. Steve, I'll see you later.
Thank you, Ali. Good evening, everyone.